Can you really profit from the news? That's a question almost every trader asks after seeing sudden market moves following macroeconomic reports or corporate earnings. And yes, one release can move a currency pair by hundreds of pips or turn the entire market around in just a few minutes. But does that mean news trading is a universal opportunity? Let's break down how these strategies actually work. When news gives an edge, when it turns into a trap, and why not every spike is a signal to act. Before we continue, subscribe to the channel if you want real trading scenarios, no fluff analysis, and a practical perspective on the market. And if you're looking for a serious platform, create an account on Strifor. Links are in the description. What is news trading exactly? It's a strategy where traders make decisions based on scheduled events, macroeconomic releases, central bank decisions, earnings reports, or official statements. In other words, where the market expects information but doesn't know it in advance. The goal is to catch the moment of surprise, when actual data diverges from forecast and sparks a move. But it's not that simple. Every move could be followed by a reversal, and emotion is your worst advisor in these moments. Why does the market react so sharply? Because price reflects expectations. If inflation is forecast at 3.5% but comes in at 3.2%, traders quickly reassess their positions. The greater the deviation, the stronger the impulse. On the chart, it shows up as a sharp spike up or down, often with a volume surge. But what happens next is the real question. Will the move continue, or will profit-taking kick in and reverse it? That's where most mistakes happen, because reacting to news is not the same as understanding the market. What methods do traders use? Broadly, two. First, manual. The trader reads the context, compares data to forecasts, analyzes chart behavior. Second, algorithmic. The bot does everything, faster than a human, but based strictly on predefined parameters. Each has strengths and weaknesses. Bots offer speed, but no judgment. Humans offer analysis, but not split-second execution. In practice, experienced traders often combine both. They automate data collection, but keep the decision-making for themselves. And if you want to see how this plays out in real time, join our Telegram channel. We share a lot of practical content there. Important note, not every news event moves the market. Sounds simple, but it's the key difference between a beginner and a pro. Experienced traders pre-filter events. How much did the data deviate from forecast? Is this a preliminary release or a revision? How did the market react in similar situations? What's happening on correlated assets? If you trade every headline, your capital won't last long. Preparation and filtering matter more than the news itself. What assets react the most to news? Most sensitive are euro against the dollar, pound against the dollar, gold against the dollar, S&P 500 index, oil, cryptocurrencies during periods of instability. Why? Liquidity, attention, and fast reaction. But that also makes them risky for unprepared traders. Let's talk about risks. You need to know them before entering a trade. Slippage. You don't get the price you see, you get the first available one. Spread widening, especially with shady brokers. Spreads can triple or even quintuple during releases. Emotions. Big moves push you to act too fast. False spikes. The first move isn't always the real direction. That's why pros rarely trade at the moment of release. They wait for confirmation, structure, volume, consolidation. Let's look at some real examples. US inflation, January 2024. Forecast 3.5%. Actual 3.2%. Dollar drops, gold dollar spikes 40 pips. 1 hour later, full retracement. Those who took profits on the scenario won. Others were left with the pullback. Nvidia earnings, July 2023. Profits nearly doubled expectations. Price soared pre-market, then pullback, stabilization, and sustained growth. Lesson? News is a trigger, but entry depends on market reaction, not just the number. Conclusion: news trading is not guessing, it's a strategy. It requires preparation, filtering, understanding reactions, and always risk management. The news isn't the signal is how the market reacts. If you can read that, you have an edge. If this resonates with you, subscribe to the channel. We create thoughtful, scenario-based content for traders who think ahead. And if you want to apply this in practice, create an account on Strifor. A working platform, competitive conditions, strong support, and access to key tools. Links below. Thanks for watching. Think like an analyst, act like a trader, and trade on meaning, not on noise.